Okay, let's continue working on October, and now we're going to book transactions that went through our bank account, and we will book them while reconciling, right? We'll combine the two. We're booking off the statement and we're doing it in the reconciliation mode. And it's one of those crunch modes when you really need to get it done. There's very little time left. So again, there's some sacrifices that we would make at the level of the details, but at the same time, again, as long as everybody's happy, everybody's on the same page, that's perfectly acceptable, because at the end we will reconcile, at the end we will hit the right accounts on our general ledger. Anyway, let's get going. Ending balance, date. Okay, we're not going to enter this. We're going to use general journal entries to stay true to our capability of booking that. All right, let's start reconciliation. All right, the only thing that shows up is the credit card payment, right? And it makes sense because we booked it while we were reconciling our credit card statement. And since this amount hits both the credit card and the bank account, it's already reflected here. So let's go ahead and check this one off. All right, and now we can start booking, right? All these transactions that are reflected on the invoices that essentially back up to this credit to this bank statement. And again, remember, bank statement by itself is not an evidence of an expense or purchase of an asset. You do need an invoice. You do need an invoice, and preferably a canceled check that shows that yes, I did purchase it. Yes, the money cleared my account, and this is the evidence, right? This is the evidence from a third-party vendor indicating and substantiating my purchase. So anyway, let's get going. I'm going to use the end of the month. Perfect. So this is our bank account. All right. So what do we have here? Well, we know one thing for sure, right? Our bank account balance will be reduced, so we can get that out of the way. And bank being an asset has to be credited to be reduced. Okay, we can enter the check number here. What else is happening? Well, we're buying some cleaning supplies. All right, cleaning supplies is an expense, goes up when debited. We can enter invoice number right here. All right, let's continue. What else we have? Well, we have this utilities, right? So again, let's get the bank account out of the way. It's an asset, it's reduced when credited, so that amount will reduce our bank account balance. Let's enter the check number right here. All right. What else? So this is our utilities. So we're going to hit our utilities account. It's an expense. Expenses go up when debited. Here it is. Let's enter the invoice number. All right. What else is happening? Right, see, they're in balance. We could have booked it right now, but we have some more invoices we got to book. All right, we have this complex one, right, that we got to book. So let's go ahead and do that one. First, let's get the bank account out of the way. So that's going to be check 1030. And now we have quite a few expense accounts, right, that we got to allocate that amount to. So let's go ahead. First is our rent. It's an expense. Expenses go up when debited. We can enter the invoice right here. What's next? That's insurance. Oops. All right, that one is for 150. Then we have dues, and that one is $50. And then we have maintenance, and that one 85. And we have advertisement and promotion for 95. Okay. So again, what you see is that we're hitting multiple expense accounts that are debited because expenses are going up in this case. We're also hitting our bank account, which is an asset, we're crediting it to reduce it. We could have booked, right, this as a lump sum, but we do want to see that level of details by each check during reconciliation. Therefore, we're hitting them in a separate line item. And again, what I wanted to show with this example, we have 10 line items, right? And like I said, it doesn't matter how many debits you have, how many credits you have on each side. What matters is that the sum of them add to equal each other. Right here, we can put an equal sign right here, right? So again, we're done booking the invoices. Let's go back to our statement. All right, save and new. And let's see if they show up. And here they are, right? And that's why we book those individually, because if we did just do one line item for the bank account, we would sacrifice this level of details and it would be just the sum of this, which is also acceptable if, you know, that's what you want. All right, so what else do we have? Well, we have the deposits. We know all of these deposits are sales, right? So we can go ahead and book them. As a matter of fact, we can book the rest of these transactions in one journal entry, right? So let's go ahead and do that. All right, so again, end of the month, bank, let's continue. So first we're gonna do our deposits, right? So we know that the sum of these deposits is conveniently presented right here, and we know all of them are sales, so we can go ahead and hit them that way. So 10, 3, 7, 75, right? Bank account is an assets. Assets go up when debited, so that's going to be our November 2021 deposits. All right, we know that the source of those deposits is sales, right? And sales being our revenue and sales go up when credited, right? So here it is. That's our sales. All right, and again, we could do mathematics ourselves, or we could trust the bank, right? And they conveniently added right here. So we just entered all of this transaction as a lump sum. Let's continue. All right, now we have the draws, right? So again, bank account, asset, reduced, therefore has to be credited. So we can sum those up, right? 3.5, that's 7, 400, 7,400, right? So that's our draw. And what's the offsetting entry? Well, that's the equity account, member draw account, right? Even though, again, it's a little bit counterintuitive, but bear with me, trust me, it's an equity account. Equity is reduced when debited. Makes sense, right? We take money out of the business, we reduce our ownership in the business, okay? So that's goes for these three. What else do we have? We have this fees, right? So go ahead and do that. Again, we know that fees reduce balance in our account, right? So here it is, right? We could, you know, add them up, or we could enter them individually. Doesn't really matter. Let's enter them individually. So we know that 25 right here, because we need different description. 25 right here, okay. Service fee reduces our bank account, and then we also know that the expense bank service fee will go up, right? And then one more thing, right? That's our merchant fee. Here it is, merge fee. All right. Again, it will reduce our bank account. That's the amount of money the bank charges us for processing payments from our customers that use credit cards, right? And then our expense account, merchant fee account, will go up, right? So those are our debits, our credits. Again, they equal to each other, right? And we're hitting the bank account individually for each instance, so we will retain that level of the details, even though we're booking everything in one transaction. Isn't that cool? All right, let's go ahead and close that. Back to our reconciliation, and here they are. That's our deposits right here. A little hard to see. So there we go. Okay, here it is, right? So that's our deposits. We know that the sum of these deposits equal to this conveniently summed up total that bank prepared for us, so we can go check those out. And then that's our draw, right? We can do that math in our head. And these are our fees. And we're at 0, right? That's what we wanted. We completed reconciliation of our bank account. Let's double check. Look at our reconciliation report. Here it is. Ending balance, yes, matches. Total deposits, yes. Magically, we sacrificed that level of the detail. But again, we achieved what we wanted to achieve, and that's one way to do it a little bit faster. Again, when you do it faster, you might have to sacrifice some level of the detail. As long as that is acceptable, that's perfectly fine. All right, we see our draws right here. We can do that math. Checks are individual, fees are individual, right? We're good to go. After that, again, we would print it, attach it to our bank statement, and that would complete reconciliation and booking while reconciliation of our bank statement